please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. So, from the low point of the day, there's quite a bit of recovery that you are seeing. And of course, we've been pointing out the move which is there as far as Axis is concerned. But in fact, now this move is spreading across. Just put out the intraday chart on ICICI Bank again. And, these stocks tend to move in tandem. First, of course, the move starts in Axis. Then ICICI Bank is making a bit of a move. I think a couple of PSU banks normally follow suit. So let's just pull out the intraday chart of SBI, Canara Bank. That is where normally, you see even that's recovering. At one point, the PSU index was down over 2%. That's SBI is showing a bit of a recovery. Canara Bank from the low point is seeing a bit of a recovery. So that this rally is once again spreading as far as the Nifty Bank stocks are concerned. Good time to get the BTST calls. Ashwani, you go first. We've spoken about the index. What about individual stocks?
So I think JSW Steel is again started to rally, so that's a buy with a stop of 358, target of 374. Vinati Organic is a buy with a stop of 1460, target of 1520. And along with Adani Enterprise, Adani Port is moving up. That's a buy with a stop of 379, target of 392.
Okay, so several buys there on Ashwani's list. Mitesh, what are you working with? Mitesh, I think your audio.
Yeah, I have a buy and a sell. Maruti, the BTST for me, keep the stop below 93.95 and look for targets of around 94.60. And Arvind is a sell. It's kind of looking weak on the indicator setup, so sell with a stop at 402 for targets of 390, more of a SCBT kind of call.
Okay, just pull out PSU banks once again. You won't notice the move right now because obviously they were beaten down quite a bit in the morning, but there's obviously a bit of buying which is happening in the stronger ones for sure. Ashwani, you reckon there could be some covering in PSU banks as well in last hour, or is it only for the bank Nifty?
I think there should be covering there because beyond a point, the market on the bank's side was not going lower. So, what is 5% down can easily recover 3% and close a bit higher.
Okay, so bank stocks pretty much across the board moving higher. If we take a look at some of the other names that stand out, it's been a decent session today for Maruti, for instance. Stock is still up about 2% thereabouts. And of course, some tech names are still up and about. So both TCS and Infosys. These are the three heavies that have had a good session between them. Neeraj, let's talk auto. Maruti, what's your call now?
We are positive on Maruti. Actually, I think from these levels also we see another about 7 to 8% return that one can get in this year for Maruti. And in auto we are more positive on the auto ancillary part. There's stocks which are catering to commercial vehicles and even stock passenger vehicle manufacturer, things like JT, KT, Jamna Auto. So there's a lot of space there in the auto ancillary where the valuation after the recent correction that we saw the last 3-4 months has make them again very attractive. So I think one should be positive on auto, but selectively more so on the auto ancillary part.
Okay, Neeraj, we let you go on that note. Thanks a lot for joining us today. Let's get in some market opinion then. Earlier we spoke with Atul Suri of Marathon Trends, who believes that the current bull market will carry on for another 2 to 3 years. This, of course, is already the longest bull market, but he believes another 2 to 3 years in the current run.
Two things really matter. One is, am I allocated? Am I long equities? And the second thing is, am I in the right spaces? So when I meet clients, etc., I find that these are the two things that need to be addressed for me as an individual and for every market participant. So all these levels that we give, yes, I mean, they may or may not, you may get somewhere near, but the important thing is that you get a sense of size and magnitude and a sense of direction. So I really think that one must have a belief in the longer term trend that we are in this market. And one must not really wait for the perfect situation, perfect correction that at which stage I'll deploy. You must get into this market. Yes, it's run up a lot. Yes, it will correct. But the thing is that you have to look beyond these short-term cycles and ultimately be allocated to equities, because I still feel that we are part of a larger bull market, which I think will carry on for the next 2 to 3 years. I think that in a larger bull market, every correction will see a bit of churn, a little churn in the portfolio. That's par for the course. It is our job to identify what is the next set of leaders. And the next set of leaders, whether it is consumption, we've been talking on this for months, whether it is select pharma stocks, whether it is the private financials, it's there. It's there on the screen as of today. We can see it every day. But the pain is that who's going to bite the bullet? Who's going to exit out of losers? Who's going to get in when things have run up a wee bit? So I think that's the whole game. Targets are good. They give you a very good sense of direction.
Atul, the bank nifty, of course, is made up of HDFC Bank and Kotak, which have 52% weight. You could add an IndusInd, and the rest, which have been the dogs for last many years, but have started to perform. But that's coming at the cost of the erstwhile leaders taking a bit of a backseat. Your thoughts on that?
So I think, Anuj, there are some stocks that are marquee names, and they represent a theme, almost a sector. Again, I'm like, for example, Reliance. I've been talking about it, that here is a stock which almost has a sectorial feel. And when Reliance comes out of a 7, 8 year, 9 year consolidation, do not expect it to be a small move. It can be a very, very tectonic shift, and the impact it has in the market. Please, I have a vested interest in this stock. I own this stock, so please do your own research. I run a PMS, so whatever I say, take it with a pinch of salt. The stocks that you mentioned, these are commercial, private lenders. Again, when these stocks, which have been through a multi-year bear market, actually 2, 3, 4 years, and when they are kind of breaking out and coming out, what you are seeing is new leadership emerge. This is to the earlier point that I said, that when markets go through corrections, a new set of leaders will emerge. And very often, some leaders in the previous move may actually rest or not do much. So it's going to be important. Even if you extend this argument further, you look at pharma, another sector which has been a 3-year kind of underperformer. And the kind of leadership that you're seeing in some of these pharma stocks is phenomenal. So I feel that in the last 2 or 3 months, you are seeing a churn, and it is important that you are able to press the trigger. So from my understanding, new sectors, new themes are emerging, and I think the crux is going to be able to move into this, because these trends, these stocks are not just a one-off small mid-cap stocks. They are marquee names, they are sectorial and theme representatives, and these I think can run for the next few years.
Atul, what about financials? Will you buy the HDFC and the relative underperformers, supposedly, HDFC banks and the Kotaks, or will you buy the ICICIs and the Axis, or will you buy both?
So if I look at the longer term theme, I think that the mega trend in our markets is private sector financials. And why I say this is that these stocks or these themes were doing very well before this correction that we saw in early 2018. Even during the correction, you found that these stocks didn't really correct much. In fact, they were continued to make lifetime highs. And when the markets again moved up, again they are making new highs. So this is, I think, a characteristic of a mega trend. And this is something you absolutely want to ride, because this is where you will find your multi-baggers. In this whole private sector financial plays, I feel that maybe there's a short-term correction. Maybe they are resting. They've run up very hard. But going ahead, I think that they can be much, much larger trends.
Welcome back. 50 up on the Nifty, so you can't say it's a bad day. Banks have recovered quite a bit, and that has been the story of the afternoon. The other strong area of the market continues to be metals, something like Hindalco, for instance, 4% higher this month. We're talking about 12 to 13% on the stock. It's been a pretty decent run for some of these metal names. By the way, should also pull up stocks like JSW Steel, Nalco. A lot of these other metal stocks are also now spiking higher. Yeah, pretty much there we go. Days high on JSW. Nalco also will come up for you. Lots of buying today. Anand, metals, any picks here? Anything that you would play for? Because the last 2-3 weeks have seen a nice trading bounce, at least on these stocks.
Well, yes, after the dollar move, obviously there was a fall, and therefore, you are right now looking for almost any sector which is where the earnings are not under threat and where there is some correction in the market. So obviously, both aluminum, especially aluminum, and perhaps to some extent steel, at least the domestic part of it, is likely to continue to do well and will therefore continue to attract attention. I am not myself not a investor in commodities because I find it difficult to time the cycle. That said, I think for the next 12 months at least, I don't think there is any danger to the earnings not coming through.
Oh yes. By the way, just pull out the chart of currency. I don't know if there's some macro trigger here because all of a sudden there's a bit of a strength coming back into the currency. That's coincided with that move that you saw on the Bank Nifty as well. You know, this move has become very correlated. We had that move on the Bank Nifty from 3 p.m. That sharp recovery intraday. Just see the Nifty Bank intraday chart now, and of course we try to superimpose the dollar rupees chart over there. That's where the Nifty Bank is. That's become very correlated, especially the way the corporate banks have rallied. And of course, on the dollar rupee, it's really interesting because from the high point, you almost went to new all-time low on the currency, which is 70.39. Went to 70.28 thereabout, 29 thereabout. And from that point, there's been a bit of a recovery that we have seen. Ashwani, then what's the verdict for the day? Today's been, of course, much more volatile than yesterday. Yesterday was a clean one-way rally.
See, every day is not a Sunday. So, because yesterday was huge, that is the reason you saw volatility today. And, you know, what was proven was that the bear on the Bank Nifty could not take the market lower by 100 points on Bank Nifty. So, that's a positive. So, for the moment, you would say no damage done, and tomorrow will be a fresh day. And there's a good chance that tomorrow we cross into fresh highs on Bank Nifty, if all else equal, because you know, the resistance at all-time high could not take you lower by 100 points. So that way, I think a fresh attempt should be in order, and possibly this time around, you may even cross it.
Okay, all right, gentlemen. So it's time to close out and look at the final rates. For what it's worth, it's a positive closing, another 50 on the Nifty, Anuj.
And you know what, again, the point yesterday, you know, even despite the big move, 135 point, it's a very nice follow-up, 48 points. And, you know, look, calling for top in this market is not going to work. That's, you know, perhaps if you go to 12,000, 12,200, I mean, at some point, of course, the market will give you a sizable and tradable correction as well. But right now, something has changed in the market. I think it did the day the market took out its previous high. And after that, it's, of course, been just one-way journey. Let's take a look at the stocks. I'm tempted to call Reliance the stock of the day once again because of the sheer contribution and the fact that, you know, when the banks were down, this was a stock that kept the Nifty bulls in the game today. In fact, quite a bit of contribution, and 8.4 lakh crore market cap is what we're talking about on Reliance. Remember, it was just 2 days back that it crossed 8 lakh crores, and in 2 days it's added 40,000 crores of market cap. That's the amount of move. Look at that, 27-point contribution on account of Reliance alone. The rest of the stocks contributing only 21 points. HDFC Twins made a move after a long time, so that also is good news for the market. Maruti, Vedanta, Hindalco, so metals did well. Infosys, though it cooled off from the intraday highs, but Infosys was also higher, made a fresh all-time high in trade. GAIL was lower, down about 5%. It actually started as one of the top gainers, but ended as the top Nifty loser. Yes Bank, where there is still some uncertainty, off the lowest point, but still down 3%. HPCL was down, and Hindustan Unilever was a bit down as well, especially towards the end when the market's focus once again was on high beta.
On the mid-cap side, not bad, Anuj. The index is closing down with a cut of about 70 odd points, but there have still been plenty of gainers, which is why I'll start with the gainers list. Of course, some of the fertilizer stocks were still excited because of this weekly DBT promise that's now being sort of spoken of. So RCF, Chambal Fertilizer, you've got 3, 4, 5%. Fact, for instance, 12%. Some of these pockets were active. Interesting buying, by the way, on a Sadbhav Engineering, just as the market was closing out. Sadbhav is up about 7.5%. Again, late buying on Jet Airways, and quite a move at that, 6.5% up on Jet Airways. Even SpiceJet rallied a lot from the lows of the day. Not so much Interglobe, but SpiceJet, and the move on Jet was particularly pronounced. Equitas has had a decent run, about 5% up. In fact, speaking of NBFCs, L&T Finance, about a 3% up move today. So actually 2% up move for that today. DHFL has seen some buying as well. So decent gains coming in over there. Metals is what I was talking about. So beyond the index names, you've also got the likes of JSW Steel rallying 3.5%. Nalco has put on some more weight. So these are names on the upside. Can count in a big move on Balakrishna Industries, 5% up on that stock today. Consumer names like Bata, even a Godrej Consumer, actually. These stocks have done well. Coffee Day Enterprises, by the way, about a 3.5–4% up move on Coffee Day as well. Some interesting names coming in from the consumer basket. Future consumer, since I was talking consumer, again, sustained buying, second day of buying on that stock continued as well. JN Irrigations managed about a 3% up move. Some buying on Torrent Power, 2.5% on the upside. Speaking of power, actually, let me shift focus, because on the downside, this is where the gains were coming off. PSU banks and then power financiers like REC and PFC, this is where the weakness was. So lots of the PSU names like an OBC, that's the index for you, Nifty PSU Bank. Individual names like Union Bank, OBC, Canara, Bank of India, all of these stocks down between 3 and 4%. PFC and REC have lost about 4.5%. PTC has lost about 3% as well. So a lot of that positive power trade was getting undone. So those are some of the highlights of the day. First Source should be added because of the big buying that we saw in that stock. And last but not the least, let's not forget IDBI Bank. Lots of volatility. The open offer seems to be, of course, the next big trigger. Look at that. Stock was actually up 4-5% in between. But then the news came from the court. The court wants the meeting when the board has discussed the LIC offer. The minutes of that meeting have to be submitted in court. Stock finally ends down about 1%.
Yeah, so good day for the bulls once again. Mitesh, your thoughts? What are the next targets on the index?
We were looking at 11,750. That was being met. But I think what is important is what Ashwani highlighted, that the fact that the Bank Nifty hit the earlier highs, but the selling wasn't very important, wasn't very strong. So the next trigger on the upside could be the Bank Nifty getting past this 28,350, 380 zone. And if that were to happen, the Bank Nifty could signal another 300, 400 points on the upside. That could pull the Nifty along with that. Difficult to give targets right now because on the Nifty we've met all the targets and I don't have any extension targets for the time being. So maybe after some consolidation we'll have fresh targets coming.
Okay, all right, gentlemen, then we'll wind it up on that note. Thank you very much for being with us and taking us through Market Close today. We will catch up again with you shortly. Right now, a quick break. On the other side, MK Stalin has been elected as the party president of the DMK. All the political action coming up. Welcome back. Some exclusive stories now. The details are on your screen. NMDC wants to get into mining of coking coal. That seems to be the latest. Let's go across to our colleague Anshu Sharma, who has those details. Anshu, what's the strategy? What's the plot here?
So if you understand that the steel industry requires a high-grade coal, which is coking coal for the business of steel making, now we understand that NMDC wants to foray into mining of coking coal and has sought from the government some coking coal mines which are not operational or not under Bharat Coking Coal. If you know that Bharat Coking Coal is into mining coking coal for Coal India. Right now, only Bharat Coking Coal is the company subsidiary of CIL which operates on coking coal. But now we understand that for the entire steel industry, there is a plan that NMDC may get into mining of coking coal. For now, it may be for its own steel plant, which is about 3 million ton plant in Chhattisgarh, for which it requires about 2.6 million ton. That's what the company has replied to our query. But eventually, there is a plan to bring in NMDC and have a focused view of mining coking coal in India, because India is dependent on import of coking coal of about 85%, which is about 45 million ton required for the steel industry. Back to you.
Okay. All right, Anshu. Thank you very much for those details. Well, that's NMDC in focus. Let's move on now. Nielsen India's report projects 12 to 13% growth for the FMCG industry by 2018. Priya Sheth caught up with Sameer Shukla, ED of Nielsen India, to understand all those numbers and the details of that report. Let's take a look.
This growth that we're projecting for the year is about 12-13%, which is a tad lower than what we saw in 2017 over 2016. So last year the industry grew at 14%. This time we are projecting at 12 to 13%. One important thing here is close to 70% of this 12 to 13% of growth that we are projecting is coming because of consumption increase, which is a good thing for the industry, where the consumption is increasing at say 7-8%. And if this trend continues, it's really going to be a really good thing for the industry.
In terms of volumes, how much do you expect volume growth to pick up? I understand the 12 to 13% is the value-led growth that we're talking about.
That's what I was saying. It's 70% of that 12-13% would be coming because of volume or consumption growth.
You know, when we look at pricing in the industry, the report specifically mentions that pricing hasn't been at the same pace as it was earlier, that is in terms of price increases. So run us through what the kind of pricing strategy would be adopted by FMCG players going forward.
Because of various policy interventions related to GST, it is bound to bring a lot of supply chain efficiency, which is again savings on the manufacturer's end. And what we see is manufacturers are actually passing it on to the consumers, which is also a reason why the price increase, the average price increase on categories is happening at a pretty small or say slow level, and that is also boosting the overall consumption for FMCG industry.
So if you look at the average price increase that is expected in this year we're talking about the calendar year 2018, in what range would you expect the average price increase to be?
So we don't have a specific model for that, but what we have seen in the last, say, 6 months, first 6 months of this year, it has been only in the range of 2 to 3%. And I won't be very surprised if it is remaining in that same level for the rest part of the year also.
And an important aspect of the report that you've highlighted is on rural growth versus urban growth. So if you run us through the kind of rural growth differential as compared with urban growth that we're seeing at this point in time, and is rural growth back to pre-demonetization levels?
Yeah, so rural growth for some time during demonetization, after that, or maybe in the run-up of GST rollout, we saw that rural growth actually was under stress because of wholesale was not picking up very well and cash was not then in system to the full extent. But now we see that in the last 6 to 8 months, that cash has been back to the system and rural growth has again picked back to a level which used to be during the pre-demonetization period also.
Moving on, in a key development, MK Stalin has been elected as the party president of the DMK. Remember, the coronation was preceded by a succession war with his own brother, Alagiri, who openly rebelled against Stalin. We have Jude Sanith now joining in to give us some more details and perspective and to tell us perhaps what the immediate challenges would lie ahead for MK Stalin. Jude, big moment this for the DMK.
A truly big moment indeed, because remember, for the first time in 49 years, the grand old party of Tamil Nadu has a new president. Earlier today, MK Stalin, of course, was appointed as DMK president, succeeding his father, M. Karunanidhi, the late M. Karunanidhi, who held that position for close to 49 years. Now, immediately as soon as Stalin took charge, he made two very politically significant announcements. The first, of course, he said very clearly that nobody is bigger than the party, thereby also making it clear that Alagiri would have to fall in line. He also stated, and I quote, "I have one sister, namely Kanimori, but no brother," quote unquote. Stalin, very interestingly, also hit out at the BJP, blaming the party for all the polarization happening in the country, saying that as far as secularism is concerned, that must be held above all ideals as far as India itself is concerned. But more significantly, what are the challenges that Stalin will have to face? Firstly, 2019. Remember, the big challenge for the newly appointed DMK president is to secure a strong alliance partner. In the 2016 polls, remember, the DMK went with the Congress, which sadly underperformed, winning all of 8 seats in the Tamil Nadu Assembly, thereby not exactly going the whole way as far as becoming a strong alliance partner is concerned. So cracking the right alliance will be key to Stalin. Secondly, will also be to ensure that the DMK stays united and stays strong, because remember, his brother Alagiri, who is causing most problems, was the DMK's strong man for the longest time in the southern districts, namely Madurai, where he assumed a whole lot of strength and thereby drove the party to power. With the rising anti-incumbency in Tamil Nadu over the AIA-DMK government, there are fears that Alagiri might continue to reinforce his power, and avoiding that and ensuring that the DMK stays united and has power throughout the state of Tamil Nadu will be key for Stalin. But as far as his resume itself is concerned, it's a pretty strong one. He has, of course, been Deputy Chief Minister of Tamil Nadu. Stalin has also been the Mayor of Chennai for 2 successive terms and has also been DMK Treasurer, Deputy Chief Minister and the Leader of Opposition. So a strong face, no doubt, to take new charge of the DMK, one he hopes will be successful for the party in the run-up to the 2019 elections. Back to you.
Okay, all right. Thanks, Jude, very much for those details. Well, let's get you some more political stories now. The opposition has slammed the BJP for stalling parliamentary report on demonetization. Parikshit is now joining in with more details on this one. Parikshit, what is the latest now and where do things stand?
For the past several months, the Parliamentary Committee on Finance, which is headed by Veerappa Moily, was preparing a report on demonetization. They held deliberations with several key stakeholders, including members of the RBI. This report, CNBC TV18 has been told, would have been critical of the government. Members of the panel have told CNBC TV18 that the intended purpose of demonetization was to check fake currency and bring back black money and encourage a digital economy. None of that has happened. We've gone back to a cash economy. There is more black money in the market, and there has been a setback to the GDP as well. This is what several members of the panel have been saying over the last couple of months. Having said that, this report was in the final stages. It could have been tabled in the monsoon session, but now we believe that this report has been stalled by BJP members. This is what several leaders are telling CNBC TV18. They're accusing the BJP MPs of stalling the adoption and tabling of this report because it is critical of the government and would have embarrassed the government if it would have been brought in the parliament and public domain. Many opposition members are also upset with the chairman, Veerappa Moily, for not taking a tougher stand and for giving in to BJP pressure. The tenure of this particular committee ends this month. Therefore, the fate of this report on demonetization is absolutely sealed, even though Veerappa Moily remains hopeful. He has put out a tweet saying that this report will be taken up for consideration next month, and he's hopeful of consensus.
Okay, all right, Parikshit, thank you very much. Do stay with us. Now, the BJP is also, we believe, been in a day-long meeting. All the chief ministers and the deputy chief ministers are attending. So what has, this day thrown up and this big party meeting, what kind of discussions are perhaps going on?
We are here at the BJP headquarters in the national capital, where the Prime Minister and the BJP President Amit Shah are meeting all BJP chief ministers and deputy chief ministers. Top leaders of the party from the central ministers have also been invited for this day-long brainstorming session, where they are going to discuss the strategy for 2019 elections and the upcoming assembly elections in Chhattisgarh, Rajasthan, Madhya Pradesh, threadbare. What the Prime Minister and Amit Shah are likely to do, they are going to seek feedback and reports about the implementation of government schemes for the poor, for the backward, and for the farmers on the ground, and how there could be better implementation in the run-up to 2019 elections. There would be a greater focus in this meeting on reviews and feedback from election-bound states, from Chief Minister Vasundhara Raje, Chief Minister Shivraj Singh Chauhan, and also the Chief Ministers of other election-bound states. Having said that, the party would also like to send out a message to the opposition for 2019. Remember, the Congress party has decided to have a month-long agitation over the Rafale deal, hold over 100 press conferences by all its top leaders. So in this particular meeting that is happening at the BJP headquarters, Amit Shah and the Prime Minister Narendra Modi, they could spell out the party strategy on how to counter the opposition and which are the points that the BJP spokespersons, MPs, chief ministers, deputy chief ministers must focus on in their respective states.
All right, thank you, Parikshit, for those updates. We need to take a quick break. On that note, on the other side, all the commodity market action of the day coming up with Manisha Gupta.
Welcome back. Let's chat commodities now, where we have seen a positive day actually commence for energy, industrial metals and the precious metals as well. It has to do with the US and Mexico finally arriving to a positive conclusion, excuse me, in sense of trade. And we also have seen the US dollar decline because of that. And many of the dollar-denominated commodities in that sense have done better because of that. Adrian Ash, editor of Gold News and head of research at Bullion Vault, now joins us on the line to talk more about that. Adrian, hi, thank you. Finally, we have seen some buying come in for gold. 1200 is holding for a second straight day. What is your sense? Where is the strength coming in from, and is this sustainable?
I think we've had a very volatile summer in gold. I think we've seen, obviously, very thin trading and a typically kind of silly summer move, the drop down to 1160, and now the snapback 1210 and above against the dollar. The buying that we're seeing coming in now, I think, is particularly consumer demand. Chinese premiums have risen. Indian demand is being reported, household demand ahead of the festive season. You're still seeing, however, Western ETF investment funds continue to shrink. And also you are seeing hedge funds are continuing to bet bearish on gold on the futures market. So you have the market being pulled in two different directions at the moment. I think it's very difficult to see a very sharp move higher right now. Some people are looking at the futures market and saying that because speculators are short, there will be a big short covering rally. That's possible, but the position is not extreme, not as a percentage of the overall market. And what we're also seeing there is we are seeing some hedge funds are going bullish. The bullish position, gross bullish betting last week did grow. So I think this expectation that there will be a short covering rally and that prices will snap higher, I think may not come through because some people are already looking for it. I expect we're going to have a bit more calm in the market now, and particularly as the European...
Adrian, would you say we've perhaps done a near-term bottom for the time, because the range in this year has been 1365 in April and now 1159 in this month. Would you say that both sides of the range perhaps have been done?
I think it's difficult to see the market going further than that right now because there's no reason to. I mean, we know that the Fed are going to raise rates in September, and betting on that now is 100%. The market is convinced the Fed will raise again in December. Betting on that is 67% of the market. We know that inflation is not coming through as strong as it appeared earlier in the year. We know that global stock markets are doing very well. The Sensex as well as the S&P in the US at record highs. We know that emerging market currencies have been hit by the dollar, but the emerging markets crisis has not, from Turkey and so on, has not bled into developed markets. It has not affected other markets. There has not been an emerging markets contagion from Turkey. So really, what is the case for gold as a short-term safe haven? It's not needed. It's not necessary. So I don't see a big surge in demand needed there. And similarly, I think the lows below 1,200 clearly did bring out a lot of long-term investment demand, particularly from households, and I think particularly from the consumer markets, India and China and so on. So I think we are probably looking at a range now for the rest of the year because, the surprises aren't there anymore.
Sure, but there have been certain reports on how the gold prices could close this year at 1,300 and how a 1,400 until next year end is not ruled out. Where are those kind of reports really coming in from?
Well, I think that kind of analysis we saw earlier in the summer, before the big drop. The idea that gold is going to end the year at 1,300, fine, but it's not a particularly dramatic price move compared to where we came into the year and what we saw earlier in the year. Really, for gold, those key levels remain around 1360, 1365, which are the highs over the last couple of years now, the top of that range. In dollar terms, we've seen gold trading sideways now for 5 years. It's been an increasingly boring market. Volatility has been very low, almost 4-decade low in volatility earlier this year. And so that does mean that when you've got stock markets setting record highs, you've got currency volatility, it means that the hot money is going to look elsewhere. Gold, I think, has become a bit of a boring market for short-term traders. And I think for long-term investors, that's a good thing because it gives you the opportunity to build a position as insurance for the rest of your portfolio at lower prices.
Well, on that positive note, thank you so much, Adrian. We'll let you go at that. Thank you so much for joining us. Well, that's the view coming in from short-term traders. It isn't such an exciting market, but long-term traders will build positions when it comes to precious metals. Prathamesh Malya of Angel Commodities as well now joins us with his take on the space. Prathamesh, hi. What is your sense on the gold prices for the near term?
Yes, I just heard the conversation between you and Ed, and for me also for a near-term trade, I am really not so confident because it is really not going anywhere. But the sense is, I think if you just looking for a trade, a bit of risk, I think a move of almost $10 from here on is likely, and that's what the short covering rally was what Adrian mentioned, I think, which is what's possible. And I think on the MCX, close to around 30,350 mark is what we're looking at. So hence, a little bit of risk attached to this buy set strategy, but a movement of 200 to 250 rupees on the MCX can't be ruled out.
Prathamesh, what is your sense on the options trading that we have seen in MCX? I mean, it has been on in gold and silver and other commodities as well. Vis-a-vis futures, how have you seen a pickup on that? Are the markets really moving there? How have the volumes and volatility been?
To be very frank, I think we purely being a retail side and we have good work on the equity side as far as options concerned. But on the commodity options side, we are a little bit slow. Hence, it would not be right to comment whether it's gaining or falling. But yes, it's a new product on the table. As far as commodity option goes, it will catch up slowly and steadily. But we'll have to wait and watch how it fares out.
Okay. Prathamesh, come in on the industrial metal space then, and we have seen some buying come back. Aluminum actually is trading more than 2% on the higher side. Are you buying at these levels, or do you think that these upticks actually might get sold into?
I think in the entire metal space, aluminium is what I'm a bit confident on rather than all the other metals being rising. So yes, for a move of almost 3% from here on is what we're looking at as far as aluminium goes. I think you can bet being on the buy side for aluminium. But rest of the commodities, rest of the metals, I would just be on the sidelines.
And a final word on the crude oil prices before we let you go. What's your sense on that? Because we have been inching higher slowly, gradually, but 76 is back here and we've gained nearly $5 to $6 in a matter of a couple of months now.
Yes, Manisha, I think crude would be the subject of the year again, and we would see possible rallies in this particular counter. But then inflation rising across the global world is really a point of concern, not for central banks though. But then as far as crude oil goes, 70 on the 76 is what you mentioned. I think a move for $2 from here on is what we're looking at in the immediate near term. But longer term rally, you really need to wish a lot of factors that would play out possibly in this throughout this year.
Fair point. We'll let you go at that. Thank you so much for joining us and giving us your strategies. With that, it's a wrap up on this edition of Closing Bell. After the bell comes up next.